Welcome to your daily dose of dividend. Today we're going to analyze Chevron. They have a market cap of $288 billion, a stock price at 146.98, and they operate in the oil and gas industry. During the last 10 years, they have actually underperformed the S&P 500 by quite a lot, and that is with its dividend reinvested. Now for some fundamental data and the average over 5 years. First off, we have a nice sales growth of 7.1%, so that's a check mark. We have an astronomical earnings growth of over 100%, so that's also a check mark. The earnings estimates are a bit lower, but still 24%. Return of equity is a bit low though, that's an X, only about 4%. The debt to free cash flow is nice though, it's low and it's about 1.5. But they are not buying back any shares. Next up, some dividend data, and first off, a nice yield of 3.86%. The payout ratio is about 37%. The growth rate is a bit low though, only 4. But they have been growing that dividend for 35 years in a row. That makes up for 7 out of 10 points. And if we check on gurufocus.com on their valuation graph, we can see that it's currently fairly valued according to them. So please share your thoughts in the comments about Chevron. Does it fit in your dividend portfolio? Next up, let's take a look at some valuation in fast graphs. And here we can see that Chevron actually had a negative earnings growth during the last 10 years. And also that the earnings is extremely volatile. It's following the oil price, of course. And the analysts expect booming earnings next year, but after that a bit of a decline. If we project out on late 2024, we can still see a total annual rate of return of 13% though, so not too bad. That's it for Chevron. If you found it informative, please leave a like and subscribe to the channel, and see you next time guys. Bye!